Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another velocity banking review. And one of the things that we have to be aware about is what is the cultural norm? What do most people think, right? So if I type in a Google search about why do we need to save money, there's endless articles from top-rated websites about why we need to save money. Power of saving money, bank rate, seven top reasons to save your money, right? Discover top 3 reasons to save money. And it says saving can give you freedom. Saving can provide financial security, right? Saving money, the benefits of saving. You see how the biggest and most powerful corporations are all about saving money, whereas when we do velocity banking, we're not going to save any money at all. Okay, so let's just go over what velocity banking is, what the default situation is for most Americans and their mindset. All velocity banking is just a fancy word of throwing all your money into debt and you're not going to save money. See the savings rate count right here? It's going to end up in a zero. And I show this to you all the time where I got my checking account and starts at zero, ends at zero, and people are like, "You don't have 3 to 6 months of savings." No way. My money is going to do two things: it's going to actively invest, or it's going to pay off debt, right? And if you're not that smart, I'm not that smart. I know that if I pay off of debt, it's like kind of like a guaranteed rate of return, right? Okay, so that's what we're gonna do today, and we're not gonna save money, and we're gonna do it with the help of one of these fellows right here, which is a line of credit. And what's a line of credit? All it is a financial tool where you can borrow money, pay back, and then use it over and over again. That's all a line of credit is, right? And in fact, I got this new line of credit, aka a credit card, today. 6 hours ago. I just logged into the bank's website. They called me yesterday and like, you got approved for a new $20,000 credit card. I was like, sweet, sweet. $20,000. What am I gonna do with it? I don't even know. You know why I got it? Because I don't need it, right? And I'm gonna talk about that, about getting credit. And I talk about that all the time too. In fact, right now I have over $547,000 in lines of credit. For $547,000. So there's different types of lines of credit. This one here is a home equity line of credit, 280,000. And the cool thing about this is you can use it to pay anything and everything. You could use it to pay the home equity line of credit can pay itself, pay its own bill. You can use it to pay student loans, auto loans, but you can't do it with the credit card, right? You can't do it with the credit card. But hey, I love credit cards too, and I explained in another video a long time ago why we got to, if we're doing velocity banking, we got to use as many tools as possible, right? They got their advantages and disadvantages. No, but I went over that in another video. Now let's go over the concept of saving money. And this is promoted by mainstream America. I mean, think about this. Dave Ramsey's The 7 Baby Steps. Step one is saving money, saving $1,000, right? And if we do a financial stress test on this, which I always love to show because, you have a penny left over in savings, you got 10 credit cards, how long is it going to take you to save $1,000? How long? Right? And fortunately, I kind of did this whole table and schedule here, right? So 10 credit cards, all the minimum payments, it's going to take us 7 months to pay off, or I'm sorry, to save $1,000. 7 months, okay? And in order to save, so there's two main costs that we have, right? Number one is time, and number two is interest. So 7 months, but in those 7 months, in order to save that $1,000, we had to pay 24 grand. 24 grand of interest. Okay? This is like this giant table I constructed to figure out if I'm in this situation, how long would it take me to save $1,000? So I don't want to wait 7 months to do that. But here's the thing: we're going to assume that we have access to a line of credit. Now, if you're in this situation here where you got 1 penny left over, folks, no one's going to give you a 20 grand credit card. No one's going to give you a $170,000 home equity line of credit, because the secret to getting credit, and I'm speaking to you as a person who has over $547,000 in lines of credit, is that banks don't lend money to people who need it. Okay? If you understand that mentality, then you will understand how to get credit, right? I know all the nuances between Equifax, TransUnion, and all the other stuff, blah, 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 blah. But if I'm in a position where I need money, I'm not going to go to a bank because I know they'll automatically reject me, right? So banks don't lend money to people who need it, okay? Very important to understand. So this is what we're going to do. we're going to have the same income, same expenses, but we're going to do velocity banking. And all it is a fancy term of throwing all your money into debt with the help of a line of credit, right? That's all it is. We're not going to save any money. Now, we're going to have something called cash flow, and we're going to increase our cash flow. And the way that we increase our cash flow, okay, is by transferring some of that debt you have, if you know how to do it optimally, into the line of credit. And so if you do a sum of all the credit card debt, the balance is $167,000. Okay, I kind of erased it here, but I'm going to put it back. $167,000. Think of it as like a balance transfer. We're going to do that, and guess what happens to these payments? Zero, 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 zero. And oh my goodness, we literally went from a penny to $5,345.84. Right? So we didn't have to wait 7 months to save $1,000. We increased our cash flow to $5,345.84. And instead of having a savings account, our line of credit is our new savings account, because if we need an emergency fund, it's just whatever's available in our line of credit. And so we're not just sitting there saving money like it's stale water. Okay? So what we're going to do is we're just going to do the calculations. I'm going to go quickly on this because I don't want to be here all day, but it's all good. I love spending time with you, and we're going to have a live stream soon, only for YouTube channel members. Probably two this month, because last month I was just too lazy. Well, I wasn't too lazy. I was traveling, but it's all good. 5345.84. So to get the next month's balance, it's the previous month's balance plus the previous month's interest minus our what we call our cash flow. And so why is our cash flow $5,345.84? Because we're going to dump our entire paycheck into the line of credit. We're going to dump the entire $8,610 and then take out the $3,264 expenses. So after every single month, it's going to go down by $5,345 plus some interest, right? So now what we're going to do is we're just going to calculate the final step of the paycheck in, expenses out. And how do we calculate the interest? Well, it's based on that thing called the average daily balance. Average daily balance multiplied by the interest rate, 0.08, and then divide by 12, right? Because it's monthly. And then what we want to do is calculate what our savings are, because our savings is now the available limit of that line of credit minus the balance. Because whenever we need cash, extra cash, just go to the bank's website, go to the line of credit website, click a button. Oh, I need an extra $10, and I'm going to click extra $10. That is the beauty of this tool, right? Well, not this one, right? It's this one right here. I just go to the bank's website, click a button. Oh my goodness, money's already there, right? No need to do underwriting, get a loan. I just take the money whenever I want, right? That's the beauty of it. And so whatever is this in this column is essentially our savings account, right? Look how easily that savings account is growing, and look how we're paying less and less interest after every single month. Wow, that is so easy. Oh my goodness. Like, I can't believe that they don't teach you this in school, and there's probably a reason why they don't teach it to you. Because banks have the tallest buildings in every single downtown in North America, and they probably want to keep it that way, right? So look how easy that is. And in 35 months, look at our new savings account is 170 grand, and we paid off all of that debt. All of that debt. Look at that, $167,000. Okay? $167,000. Now, again, remember, we're doing the opposite of what mainstream society teaches you. And look at all this propaganda. I don't know if you call it bank propaganda or what do you want to call it, but everybody's just saying you gotta save money. Biggest corporations, richest corporations in the world saying you gotta save money. Yeah, saving money is important. Investopedia, saving money is important, right? And then you wonder why like the average person can't win, especially with debt, right? In fact, if you think about it, right? Think about when you talk to your friends and family members in the holidays, okay? And you tell them, oh, I don't need to save 3 to 6 months, right? Because they're conditioned. The media is everywhere, right? Look at Dave Ramsey's baby steps. Save 3 to 6 months for emergency expenses. Why do that when you can put all your money into debt, right? So just to end it off for today, I just want to make sure that I'm not crazy. So I'm going to ask ChatGPT this. Okay, so what am I going to ask ChatGPT? Well, I'll just ask, okay, if I go to a holiday party and talk to friends and relatives and tell them I don't save money ever and will, or I don't save money and refuse to have 3 to 6 months of emergency funds in a savings account, would they react positively or negatively? Would they, I would say, would they like, are they likely to react? All right, let's go ahead and ask. I don't like the two column responses. I just want ChatGPT just to select one. Okay, but let me go ahead and I'll just select the first one just because it's shorter. But look at this. I'll just do this one.
It's likely that many people would react negatively or at least with surprise. The idea of maintaining 3 to 6 months of emergency funds in a savings account is a cornerstone of traditional financial advice, often taught as a basic rule for financial security. If you express a viewpoint that goes against this, they might interpret it as risky or unconventional. However, if you explain your reasoning, such as how you manage liquidity through a HELOC, use velocity banking principles, or invest in cash flow generating assets, you might win over some open minded listeners. The key is how you frame the conversation. 1. Focus on the logic. Explain that you're not opposed to being prepared for emergencies, but you approach it differently by maximizing your money's efficiency. 2. Understand their concerns. Be ready to answer questions like, what if the HELOC is frozen? Or what if you can't access your cash quickly enough? 3. Share successes. If you've effectively managed without a traditional emergency fund, sharing those experiences could lend credibility to your argument. Some people may still be skeptical because your approach challenges the conventional safe narrative, but others might find it intriguing if presented clearly and confidently.
Yep. So we'll end for that today. But again, yeah. So, like I said, moral of the story: um, I don't save money. Right? You do whatever you want, but I don't save money because all my money is actively being applied to debt. And when you pay off debt quickly, you don't pay as much interest. And if you save money, have a savings account, then it's just kind of like the 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 money is like stale water, right? It's not being applied actively to anything, right? So, okay, well, we'll make it quick for today. Have a great day, everybody. This is Korean Atlanta Mentorship. Just another Velocity Banking Review. Enjoy your day.